Are you looking for an easy yet a smart investment option? Welcome to Vanguard Target Retirement Funds. With this one fund, you literally will never need to think about investing again until you're ready to retire. Hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. One of the most common investing questions I get is, what should I invest in? Just the other day, I had a friend who wanted to open up his first retirement account, but wasn't sure where to start. Of course, being the investment nerd that I am, I started to explain to him the importance of diversification, asset allocation, and risk tolerance, and how he needed to incorporate all that into his investment strategy. Little did I know, I lost him even before I started my explanation. All he really wanted to know was what he should invest in, so he didn't have to think about all the mumbo jumbo stuff I was talking about. And it got me thinking, if I had to narrow it down to just one advice, what would be the simplest, yet the best investment advice I can give to him? One that would allow him to gain all the benefits of investing in the market, without all the overwhelming complexity it comes with. And I realized it would be the Target Retirement Fund. And for me, specifically, Vanguard Target Retirement Fund. So in this video, we're going to deep dive into Target Retirement Funds. I've broken this video into 3 sections, so feel free to skip around. First, we'll break down the fundamentals of Target Retirement Fund. What it is, what it's trying to accomplish, and why you should consider it as your investment vehicle. Second, we'll play the devil's advocate and delve into why a Target Retirement Fund might not be for you, so you can hear both sides of the argument. And third, we'll jump into Vanguard's website and look under the hood of a few specific Vanguard Target Retirement Funds and identify a few that will be ideal for you. Alright, let's begin with some fundamentals. What is a Target Retirement Fund? They're sometimes called target date funds or sometimes life cycle funds. Simply, Target Retirement Funds are funds that not only invest in well-diversified funds for you, but also rebalance its asset allocation with time as you get closer to your retirement age. If you want to make good investment decisions, but don't have any desire to learn about portfolio design or investment strategy, this one fund would literally be all you need for the rest of your life. A Target Retirement Fund holds several other funds within it, and thus is most often called fund of funds. For example, a Target Retirement Fund would likely include a stock market index fund, an international index fund, and a bond index fund. And these funds would own its own share of stocks and bonds based on the index that it is following. And this is where we have our first major benefit of investing in Target Retirement Funds: automatically built-in diversification. Diversification is one of the most important concepts to investing because it is the key to reducing investment risk. The fastest way to get rich overnight is to own the next Netflix. But the fastest way to lose all your money is to own the next blockbusters. Unless you're a professional investor who studies stocks and companies for a living, to know what companies will do well or not do well is nearly impossible. And even the majority of professionals don't do a great job of it. However, you don't need to have a magic ball in order to get healthy returns on your investments. If you buy a well-diversified index fund like a S&P 500 or total stock market index fund, your investment is highly diversified. And you're tapping into the growth of the stock market while at the same time protecting yourself from single stock risks. An index fund like the S&P 500 index fund is great because instead of holding a few stocks, you're holding on to essentially a share of all 500 companies within that one fund. Companies like Apple, Microsoft, Amazon, and even smaller companies like Gap, Under Armour, and News Corp. And Target Retirement Funds automatically have this built-in diversification because they hold index funds as its core holdings. But in order to manage risk, you don't just want diversification, you also want good asset allocation, which leads us to the second major benefit of investing in Target Retirement Funds. Holding a S&P 500 index fund or a total market index fund is a smart investing move. However, stocks represent just one asset category against all other types of asset categories out there. Bonds, real estate, commodities, and even cash represent different asset classes. Especially as you get older, you want other asset classes within your investment portfolio to help offset or augment your equities holdings. For example, you might want bonds to help smooth your stock volatility, or you might want international funds to gain exposure to the market outside the United States. And not only do you want these other asset classes in your portfolio, you want to adjust the amount you have of each asset class as you get closer to retirement age, making your portfolio more conservative versus aggressive using different asset classes. A general rule of thumb is that as you get closer to retirement age, you want to hold more stable assets like bonds and cash versus stocks in your portfolio. And this is where investing becomes a lot more an art than science. And especially because past returns don't guarantee future returns, you as an individual investor will need to make adjustments to your portfolio based on your risk tolerance and your comfort level with different asset classes. But when you invest in Target Retirement Fund, all this is done for you, automatically. What a Target Retirement Fund will do is it will automatically select a blend of investments for you based on your age or target retirement year, all in well-diversified index funds across different asset classes. And it will start out with more aggressive allocation when you're young, and then automatically shift to more conservative allocation as you get older. You don't have to worry about anything except to just regularly deposit money into your Target Retirement Fund. And this sums up to the third major benefit of investing in a Target Retirement Fund. It is just so darn simple. Jack Bogle likes to say, simplicity is the master key to financial success. Do not discount the amazing power of simplicity. By investing in this one single fund, you get a built-in diversified portfolio that you don't have to rebalance or adjust. The fund formula automatically reallocates the fund's asset mix to fewer stocks and more bonds as you get closer to your retirement year. And when it comes to cost, Vanguard recently made adjustments to the expense ratio, making it even more attractive. The average expense ratio for Vanguard Target Retirement Fund is now 0.08%. It used to range from 0.11 to 0.15%. This means that when you invest $10,000 into a Target Retirement Fund, you're essentially paying $8 for all the services of built-in diversification and automatic asset allocation adjustment. I would say that's a pretty good deal for $8. But of course, I can't leave you here. Let's play the devil's advocate. To be honest, Target Retirement Fund isn't for everyone. Despite how much I advocate for Target Retirement Fund, I actually stopped investing in them a little while back, and let me tell you a few reasons why. What makes Target Retirement Fund so great is also its greatest downside. You are not in control. When you choose to invest in Target Retirement Funds, you can't select a specific index funds. You can't select the asset allocation, and you can't reallocate the way you see fit. The fund does this all for you. What if you prefer the S&P 500 index fund versus a total market index fund? What if you prefer exposure to a specific international market versus a total international market? Unfortunately, you can't make those customized changes. And if you're the type that likes specific control in these areas, a Target Retirement Fund may not be for you. And tied to the lack of customization is the lack of personal risk tolerance incorporated into these funds. The willingness to take on more or less risk is a very personal preference. You could be the type that loves taking risks, or you could be the complete opposite, completely fine not taking any risks. We're all very different individuals when it comes to our risk tolerance, and when you invest in Target Retirement Funds, you can't factor in those personal preferences. The fund has a risk profile formula it follows, and you can't change that. And you have to live with the consequences of that asset allocation. If you know your risk tolerance well and like the idea of managing your risk with different asset allocation models, then Target Retirement Fund most likely is not for you. And for me, that has been the case. When I first started out in my investing journey, I had no idea what I was doing. I made the mistake of investing in actively managed mutual funds because that was what professionals told me to do. I got wiser and started to look into index funds later, but I still had very limited understanding of different asset classes and different types of index funds. So I made the decision to just invest in Target Retirement Funds because I still wanted to invest. It was only many years later, when I had increased my investing knowledge and had a good idea of my personal asset allocation, that I moved away from Target Retirement Funds. But to this day, a good chunk of my money is still in Target Retirement Fund, and I don't plan on moving them anytime soon. It was the best investment decision I made at the time. And that is a decision that you must make for yourself. For my friend who is interested in learning more about investing, Target Retirement Fund is perfect. Of course, he isn't growing his investing knowledge, and that is a downside. But I've learned that most people are actually in this boat. They have careers to manage, families to take care of, and other endeavors they want to pursue. And if this is you, I say the best investing decision you can make for yourself is to buy yourself Target Retirement Fund and invest for life. But if you're at a point where you want to grow your investing knowledge and also manage your portfolio more hands-on, check out my video here on 3 fund portfolio you might find useful. But let's say that you are interested in the Target Retirement Fund. My recommendation is to invest in Vanguard Target Retirement Fund. Now, let's take a look at a few specific funds that will be ideal for you. Below in the description, I have a link to a website that lists Vanguard's 12 Target Retirement Funds. When you go to the website, you'll find Target Retirement Funds ranging from 2015 to 2065, plus one for those already retired. Vanguard makes identifying your Target Retirement Fund super easy. You just need to look at the birth year column. For me, given I was born between 1978 and 1982, my fund would be Target Retirement Fund 2045, VTIVX. It's making the assumption that I'll be retiring when I'm close to 65 years of age. 25 years from now. Now, if you're much younger and have 40 years to retirement, then your fund will be Target Retirement 2060, VTTSAX. And if you're a bit older and have 10 years to retirement, then your fund will be Target Retirement 2030, VTHRX. Let's take a look at what's within this fund. As I mentioned earlier, these Target Retirement Funds are fund of funds. So as you can see here, the Target Retirement Fund 2045 is holding several other funds within it. 4 funds specifically: the Vanguard Total Stock Market Index Fund, the Vanguard Total International Stock Index Fund, the Vanguard Total Bond Market Index Fund, and the Vanguard Total International Bond Index Fund. They're all low-cost index funds, and each fund is for different investment objectives. You can also see how much of the total retirement fund is allocated to each underlying fund as of this time. What this fund will do is, as you get older and your retirement year gets closer, the underlying funds will automatically adjust their allocation. It will steadily become more conservative by allocating more funds to the bond index funds. You don't even have to log into your account. All this happens automatically. The expense ratio here is 0.08%. Compared to a basic index fund like VTSAX, which has an expense ratio of 0.04%, it is slightly higher. But you are getting additional service for that additional 0.04%, which many people find well worth the money. In addition, to put that to scale, if you have $10,000 invested in this fund, we're talking about a difference of only $4. If you're looking to make one best investment decision in your life, invest in Target Retirement Fund. And if you can, Vanguard Target Retirement Fund. The only action you need to take is to identify the specific fund based on your retirement year and just invest regularly. By choosing to go with a Target Retirement Fund, you'll certainly outperform majority of the actively managed funds out there, and you're setting yourself and your family up for success. If you'd like to learn more about specific asset allocation models, check out a few of my videos here. Thank you guys for watching, and until next time, all the best.